Hey everybody, it's Pete. Good morning. Welcome to a new episode of Stocks for Breakfast. Today we're going to talk about something that gets brought up to me quite a bit in feedback, both here in the community and also on social media. We get quite a few people reaching out to me saying, I think I understand what I'm doing, but I'm not really sure how to prepare for the day or prepare for the week. So we're going to do some basic chart analysis. Now, if you know that, if you've been a subscriber to the channel a while, if you've been in the boot camp, if you've been in the community, which by the way, I highly recommend you sign up for the boot camp. I'm very big on making that jump from chart reader to tape reader. And there's a difference because chart reader takes a look and sees what's going on right now. Tape reading puts the pieces together to build a great argument for a trade. And I'll give you an example of what I mean, the difference between the two. A chart reader might look at something and say, wow, that looks really good. I'm going to look for an entry. A tape reader adds as many pieces to the argument as possible, so much more than just, I want to be a buyer of this stock. And that's kind of the difference. You assess the order flow. You assess how the momentum has moved over the last few days, few weeks, few months. And then you assess the risk potential versus the profit potential. And then even on top of that, it's what happens between entry and exit and how you work the order, how you build the position. Do you add as it moves in your favor? Do you go a little bit more aggressive because you have what we call an A-plus trade? So we're going to take a look at chart reading. We're going to take a step back and look at chart reading and take a look at a list of stocks that is in my watch list every day. I don't necessarily trade them every day, but you'll see why. Some of them are in play, some of them are not in play. And what we're going to focus on a little bit here is the price action from one day to the next, 1 week to the next, and one close to the next. We're going to throw something in there, a little curveball at the end, which is a little bit more of actually looking at how the stock traded for a particular day, how it traded for an entire week, and how that sets up how you should look at the market and that stock the next day, if there is even something to do. We're going to take a look at a few where there's absolutely nothing to do. And that's really where some traders get into trouble, is they get involved in stocks that they hope start moving when there's really no edge to it. And the easiest trades from day to day and week to week are the ones that already have smart money in them, already have buying or selling in them, if you happen to be a short seller. So that's, I think, a big key that a lot of traders are missing. And this is really where you start to lose your confidence as a trader, where you're putting on trades, you're like, I feel like every trade I'm making doesn't work. That happens before you even put the trade on. If you do the right work before you put the trade on, it becomes a lot easier to put a trade on and get a little bit of a head start right away. You put a trade on, you see the signal, and it starts to float in your favor. Or if you have some really, really good opportunities, you put a trade on, it moves quickly in your favor. And you got one of those trades where you just can't mess it up. It's a question of profit potential. So we're going to go bar by bar and 2 time frames. We're going to look at the weekly chart and we'll look at the daily chart so that you personally can look at stocks and say, all right, this has something to do and it should have my attention because smart money is involved in the stock. Or there's nothing to do and you just stay in cash or you look for another position. So I think this is something that really separates traders that see their account steadily growing every single month from those that are frustrated and feel like I'm smart, but I don't know what I'm missing. And I've been there. I actually feel your pain on that. I've been there. So we're going to head over to the charts. We're going to take a look at some stocks and we're going to kind of do a little bit of a rapid fire analysis. So obviously we're going to start out with the SPY. We're going to take a look at the market, and you can see here we're looking at weekly charts and we're looking at daily charts. So the minimum criteria in my world is I am looking for what is known as well bid and where the stock is closing. A big problem that traders have is they trade stocks that are not active, and when they do become active, because they don't have an edge, they kind of get run over sometimes, and they're calling me up or messaging me, and they're like, I've been stuck in this trade for a week. What do I do? Well, generally speaking, if you're not sure, and this is a big deal, if you're not sure what to do in the trade, you shouldn't be in the trade in the first place. Just get out. However, take it even a step further and say to yourself, if I didn't have it, would I want it? And the right answer usually comes back immediately. So in this situation here, what we're looking for is the consistency from week to week. But I want to focus on these 4 weeks here before we get over here. So these smaller body candles, those are opportunities that are going to be very frustrating. So as you're looking at opportunity, and the preceding price action will tell you some of the characteristics of whether or not that stock right now is in play. These are what we call melted candles. And melted candle means that it opened and closed near the same spot. And you can see the difference between a melted candle versus what we call an energy candlestick. So I'm looking for energy candlestick. That means the market has attention on it right now. That means the smart money is allocating capital to it right now. That means the smart money is doing something with that stock right now. And then when you start to see energy candlesticks followed by more energy candlesticks, these are the types of stocks over a week that tell you the next week it should have your attention if it's doing the same thing. So you want to go from well bid in our terminology to closing on the highs with bullish gaps on the higher time frames, then dropping down and looking for those same ideas on the lower time frame. So as long as you see that simple picture of closing near the highs, higher highs and higher lows on the higher time frame, those are stocks that should have your attention because it has the smart money attention. This type of price action, if you're trading something that on the weekly, monthly candlesticks have tiny bodies, that's indecision. The smart money is not making a clear decision on what they want to do. So that's why we call them melted candles. You can see the body of the candles all the way melted down. And that means that it traveled here, and ended up almost in the same spot. So in that time period, there wasn't a lot clear. Whoever was in charge of that stock, whoever was allocating money to that stock, there wasn't enough buying pressure to create one of these types of candles. Okay? Now, I know what you're saying over here is, wow, why did that go from one huge day to one red day? This was the FOMC announcement on June 10th that really crushed the market that week. So anyway, looking at this from day to day and looking at this from here, what I want to point out this here to this here. So we actually just said that we want to avoid this. The very beginning of something interesting is when we see higher highs and higher lows, but that's not enough. So when you're looking at your stock, you say, well, it is a higher high and a higher low, but it's closing near the lows and it's a melted candle. That's not what I want. That's what I want. But what happens here? This is now inside the previous week, so it's good, but not great yet. So what would we want to see the following week coming out of that? Well, we'd want to see this. We'd want to see something like this. We'd want to see the week open above the previous week. We'd want to see price action as the week unfolds stay above that opening price. If that happens, then on the daily chart, we can be confident looking for trades in that direction and timing our swing trades as well. So look at how the week actually ends up unfolding. The week ends up unfolding as we near the all-time highs at this point. This is the week of August 3rd. So this week of trading, the week of August 3rd, was very good. The market opened above the previous close like it was supposed to for the week. The market opened here and stayed above that opening price for the week. And the candle kept getting taller and taller and taller, and we had higher highs and higher lows. So that week was a very good week of trading. So as the week unfolds, as Monday unfolds, on Tuesday unfolds, now you're looking for the same price action over here in your stocks. So that would be the week of August 3rd. So if we go over here, this was August 3rd right here. So bar by bar, there's August 3rd, 4th, 5th, 6th. So look at the size. First of all, look at the color of the candle. We kept closing above the open. But look at the closes at the end of the day where we continue to close near the high. So what does that tell you about the stock going into the day? What does that tell you about your conviction level in that stock going into the day? As long as you continue to see what you need to see in order to want to be allocating money to that stock, you confidently trade it. But if we go to a different type of stock, and let's go to Goldman Sachs, which we've been watching for a while now, you will see that there is not consistency. A little bit here, but is that perfect? No, it's a melted candle. We got a giant melted candle. We're not seeing this. This is what we want to see. And again, this was the June 10th announcement. So if you can identify a trade in a stock that is closing at or near the highs from week to week, higher highs and higher lows from week to week, you start to get something interesting. So you can see that's not the case here. We have selling, then we have a melted candle, then we have buying, then we have a melted candle, then we have selling, and then we have a melted candle. From week to week, the stock is not tradable. It's not clear. Smart money is not saying, you know what, let's start building a position in this stock, or let's start dumping a position in this stock. From week to week, it's not doing what we need to see. So again, if we do one candle to the next, okay, that's interesting. Maybe I want to see the same exact thing. So I want to see a big green candle, right? Closed, higher highs, higher lows, closed near the high. So I want to see that. So before the week even starts, you know what you're looking for. So you need to see a higher opening and stay above the opening. Okay, it starts out promising, and during the week, you could have continued to look for buying until the daily candles reverse. So this is July 13th, the week of July 13th. So if we go backwards and look at that week, that's here. So we started out promising right there, but let's put it into the equation also. We had big resistance at 220 before. So over here, before the week even started, you knew that 220 was resistance level that we haven't been able to get through. So the next day we opened higher, that's good, but are we seeing what we want to see? Are we getting a follow-up green candle? So the bullish gap is good. But as the day is now unfolding, whether you're day trading it or swing trading it, you have to say to yourself, am I seeing what I want to see? And in this case here, the answer is no. So your conviction level is going to be a little bit different. It's still bullish because you have to respect the gap, but now look at where we closed. Tiny, tiny melted candle. That's not what you want to see. So that day ends. So what are you looking at in that stock tomorrow? You say, well, minimum criteria, minimum, it needs to stay above the open price and stay there the whole day. So it needs to open above the open price and stay there the whole day for me to have conviction to expect this 220 target to get hit. So the next day comes in and that looks pretty good. But again, is it a perfect day? Is this a trade where you can have maximum conviction in this idea? Well, it's another melted candle. That's 2 days, Monday and Tuesday unfold, and there's a lot of indecision there. A lot of indecision. But so far now you can see that this is the open, and that's the close. So it is a green candle up till this point. So what do you need to see heading into tomorrow to feel comfortable based on this and expecting this to follow through and get all the way up there? Well, what you need to see a open above the previous day. So you're going into the day saying, if I want to hold this and continue to stay long this stock as a swing trade, or if I want to look to buy this stock today and day trade it, it needs to be above yesterday's highs and stay above the open for that day. So we need a green candle that stays above the previous close. All of that criteria needs to be met. So we have this monster gap up through the 220 level. So we set up this criteria where the minimum criteria gets met here. And again, this is the minimum criteria. This is really not analyzing order flow. This is just bar by bar setting up what you're looking at the next day. You get a giant gap higher, which is very good for the stock, and trades through the 220 resistance level that we said that was the target. What do we need to see to stay in the trades? Now, here's where a trader will get in trouble. And we're going to actually end the video on this because it's very important. If we know what we need to see, if the stock is performing well, whether it's a daily candle, a weekly candle, or a monthly candle, you still need to see this. In order to maintain conviction in your position, you need for new buyers, fresh buyers to come in and support that stock and continue buying it throughout the day. Very early in the day here, the stock started to see selling, and because this candle is red, that means it opened there and closed there. So right away, after you worked this position, found minimum criteria, didn't have the greatest criteria here in the world, you weren't seeing what you wanted to see, but it closed on the highs, and you said, I'm going to give it tomorrow to see what happens, and you get this monster gap. Now, while you're sitting at your desk, whether you're at your day job, your day trading job, it doesn't make a difference. You need to set an alert and need to say to yourself, okay, 220 was a big level. We blasted through that level. Now, in order for me to hold this trade, which is a big problem for a lot of traders, how do I know when to get out? You need to say to yourself, is the stock doing what I want it to do? What do I need to see? What don't I want to see? I do want to see green and continuation after this gap. I don't want to see red and starting to trade below the opening price. So once this market opens, and again, it doesn't matter if you're trading part-time or full-time, as soon as the bell rings, you can set an alert, say, okay, it's below the opening price, below the opening price. I need to make a decision here. And that's where traders get in trouble. And if you built this position as it started to move in your favor, and now it starts to move against you, you need to know what the trade should look like prior to the trade. So that's just kind of like the very foundation of chart reading into tape reading. It's not that complicated. As a matter of fact, it's relatively simple. The problems we get into is when we if we even do the analysis from bar to bar, if assuming we do it, is then not paying attention to the results that we get back, not paying attention to the feedback. So if you put a trade on and you analyzed it and you read the tape and you say, it's not really doing anything, but I think it's going to go up today, and you make that trade anyway, and maybe you make some money on it, that doesn't make it a good trade. That makes it a lucky trade. And you don't want to be lucky. I talk about it all the time. You want to be the asset. You want to be the reason. So if you're looking at a trade and you're setting something up, and let's say you're not even in the trade yet and you're looking to get into it tomorrow, you have to look to the left and you have to look at the weekly chart. You have to look at the daily chart. The very first things that you're going to look for is, did it have higher highs and higher lows if you want to be a buyer on the weekly chart? If it did it close above the open? Did it close near the highs? Each of those answers that come back give you tape reading feedback to say, yes, it was higher high and higher low, but it closed below the open. Okay, still okay, because institutions are creating higher highs, they're holding higher lows, but after the market opened, after the week opened, selling came in. So it's not perfect. Versus, yes, I have higher highs, higher lows. It's above yesterday's high, it's above today's open, and it's above yesterday's close or last Friday's close if we have a weekly candle. That argument that you start to build, all of a sudden you're like, okay, like that, you can instantly tell what a good situation is versus what's one of those situations where you drive yourself crazy and you're like, maybe I don't know how to trade. That's because of the poor situations that you're choosing. Now, what's interesting, and that was totally unscripted, was the trade that we looked at in Goldman Sachs. It had a really mediocre argument, but it did have an argument. So that surprise gap that we had in our favor, those kind of things happen when you start to build decent arguments. When you build great arguments, you get explosions in your favor. And those are where the biggest conversations we have are, how do I manage the winning trades? So it's kind of interesting that it's not challenging, but it needs to be structured. That's the key. And here's also the key. It doesn't matter if you're day trading, swing trading, or holding stock for a month. And that's a trading window to me. The choice you have is to do the tape reading analysis and then actually use it, or do the tape reading analysis and not use it, because the weakest argument should have your lowest conviction, which also means it should have your lowest share size. So for example, there's been some stocks that we've been calling them one-day wonders, where they just bounce one day, and then quite a few people are like, can we trade this stock? Can we trade this stock? And I'm like, I understand the argument, but it's really low on the argument scale where you need to put more into that. Well, it went up yesterday. I understand it, but that's not a great argument. If you tell me it went up yesterday and it's well bid and last week is well bid and both candles closed on the highs and it has room to go and other stocks in that sector are also strong, now you're building an argument. So when that stock opens tomorrow, you can confidently look to build a swing trading position. And again, what's the minimum argument after the market opens? It needs to stay above the previous close, needs to stay above today's open. If it opens up higher and trades lower, now you need to know what you're going to do beforehand. How do I read the tape in that stock? Well, should you buy a lower opening in a strong stock if the argument was super strong coming in? But should you buy a higher opening in a stock that was only strong yesterday? Then you want to wait for a little bit more confirmation as the day opens and unfolds a little bit more, especially if you're a day trader. So these are the kind of fun things that happen in the community, and these are the things that I try verbally to talk them through in the community, and I try my best to print out charts and say, print that chart out. That's one you want to read. I'm walking you through the repetition to develop the skill, to develop the habit, to be able to look at a trade and say, I can see why that's nothing. I can see why there's nothing going on there. I used to do that kind of stuff, and now I stay away from it. That's a big deal, because once you make that leap, where you're not just reading the charts for patterns anymore, you're reading the charts for probability of making money, that's where trading becomes really fun. And I still see some traders who've been in the community for a week or two still hanging on to the old habits of just wanting to be in a trade, versus the traders who are fully grasping the order flow masterclass. They're jumping into the training. They're watching the tape reading lessons. And now they're calling out ideas that make sense. And most of those trades are good ideas. Then it's just a question of follow through. That's where the money comes from. I'm telling you, when you learn to minimize ideas that have small probability of follow through, and you start to take more trades that have good arguments, and then you get to a point where, like, my gosh, I can't believe I used to trade that kind of a stock or that kind of a setup because there was really nothing more than it was going up right now. You want absolute conviction in your ideas. You want to never hesitate. You want to get in there, see the trade, put it on, see the trade, put it on, see the trade, put it on. And that's what makes trading fun again. Leave me a message if you have any comments. Have a great day.